You are listening to ChartingWealth.com for Monday, the 21st of March, 2016. We are looking at the markets, what happened as the week closed. As we get into the new week, we see on the two-day chart with IYY, the Total Market Index Fund, that the markets continue to go up on the two-day chart, still well above the two-day trend line, a good line that continues to hold. The MACD is positive, it's diverging, continuing to do so, not moving toward the signal line, and even though our derivative oscillator is losing some of its energy, it's still positive. If we go for intraday movement to take a look, what do we see? Well, we see that we had upward movement in the morning on Friday the 18th and then some downward movement in the afternoon. All said and done, the total market was up 0.36% for the day. Now let's look closely at what's going on in our other two indexes. We look at SPY on the two-day chart. We see that we're going to have to redraw our two-day trend line. Otherwise, it has been violated. Can we do that in good order? Yes, we can. We're connecting two-day trend line with the 26th of February and the 17th of March, and we're still in positive territory. Derivative oscillator looks good. MACD looks good. If we look at the 4-hour chart, what do we see? We saw some down movement in the morning and in the afternoon. Technically, the SPY, the Standard & Poor's 500, was down 0.12% for the day. Still in positive territory, though still well above the two-day trend line. Market just sort of slipped sideways, mostly on Friday. Now let's go to the two-day chart on the Qs, that is the NASDAQ 100, still in positive territory above the two-day trend line. Our MACD looks good. Derivative oscillator is losing some of its energy on the two-day chart. If we look at the intraday action on the 4-hour chart, we see that we basically have a doji. We have some questions there, not crossed over going down yet, but could be getting close. Derivative oscillator's losing some of its speed, and that is where we are on our three indexes. Now, quickly, we will look on the two-day chart at gold. What is gold doing? Well, gold crossed over going down on the two-day chart back on the 15th of March and has continued to slide sideways. We do have a green up candle. However, gold on the short chart, that is on the one-day chart, on the two-day chart, still in an upward movement. On the one-day chart, it was actually down technically on Friday 0.27%. If we look at our 4-hour chart, what do we see? We see that gold is trying its best to cross over going up and is just not quite making it on the 4-hour chart. A bunch of upward movement on the 4-hour chart back on the 17th, and then started moving back down. But again, remember, gold is in a confirmed down movement on the big chart at this point in time. Hopefully your trades and investments are going well. You're listening every day, following us. If you don't have our How to Read a Stock Chart video, all you have to do is go to chartingwealth.com and sign up for our daily updates, plus our weekly update that we'll be recording soon and getting out to you. Thank you so much for listening. Follow us on Facebook, Instagram, YouTube, you name it, we are there, and Twitter. Thanks so much from chartingwealth.com.